GE Shipping is the next company we're focusing on. They posted a good set of first quarter earnings. GE Shipping, by the way, is also another stock which has done very, very well. Revenue growth for the company has been robust both year on year and sequentially. There has been a big jump in EBITDA margin to over 50% in spite of expenses going higher. We have Mr. G. Shivakumar, Executive Director and Chief Financial Officer at GE Shipping, to talk to us about the business. Mr. Shivakumar, great to have you back on the channel. Thanks very much for your time and congratulations. I mean, finally, the market has shown the GE Shipping stock some love. Your thoughts, Mr. Shivakumar, on how the business is. First, tell us about what happened in the quarter. How were charter rates like as compared to the previous quarter on an average for product tankers? And how did that sort of seep into your numbers for Q1?
Morning, Prashant. Thanks for having me. Yes, we had a pretty good quarter, and it's been driven by the markets being very strong across the board for all four of our sectors. That's crude tankers, product tankers, dry bulk, and LPG. Especially product tankers have seen a very good quarter. I mentioned this the last time I was on your show. Product tankers have done very well because of the imbalances in refining capacity in the between the Atlantic Basin and the rest. So product tankers on average made a little over $25,000 a day. So across the board, actually, our fleet was earning in excess of $25,000 a day, which is, in the case of tankers, more than twice what they were making a year ago. This is on a per day basis. And also more than about twice what they were making in the sequential quarter. Again, disruptions caused due to the Russia-Ukraine war triggered it. Also the imbalances, and then the imbalances kicked in on the refining margins.
That's
what has really helped.
Has that continued in July as well, Mr. Shivakumar, these kind of rates?
Yes. So product tankers continue to be strong in July as well. And even as we speak, they go up and down on a daily basis, but they continue to be strong. The crude tankers had come off a little bit in the month of June, but in the last week or so, we've seen the crude tankers as well strengthening, possibly because of an increase in Chinese imports. As we know that for a couple of months, Chinese crude oil imports had gone down, but apparently there's an increase in those imports. We are not able to confirm it from the flows yet, but that's one of the theories behind why crude tankers are picking up now. Dry bulk has come off a little bit in this time.
Okay, all right. Hi, Mr. Shivakumar. No doubt of it. The numbers look very, very good. And those rates that you're giving us, $25,000 per day, doubling, that's clearly worked out in the numbers. But, European ships, they were not allowed to transport Russian crude, even to non-EU. Now, this, I believe, has changed in the last week. This could possibly improve the availability of shipping capacity for tankers. Could it have an impact on the TCY prices? Your take, I wanted.
Yeah, it's it's in a constant state of flux. It is causing. There are a lot of owners are just not inclined to do that business because the risks are unknown. So it's really not an easy decision to take, even if you get these nominal reduction in sanctions or regulations. I don't think it's going to help that much in freeing up capacity.
So short point is that you continue to expect this imbalance to continue because the world is in a flux, and in turn, that's what will help GE Shipping. Y'all are well placed.
That's correct. On the flip side, you have demand pressures all the time.
Got it. All right. I wanted to also ask you about your smaller part of your business. That's the offshore division. I tried to probe you the last time around. I think you told me that wait for a date post the results. So we've got that. The offshore division is showing signs of a turnaround. It's almost moved into the black. And I think it did close around 200 crores odd. Do you expect that segment? It's 22% of your total revenues. Will it turn around in the coming quarters? That's moving into the black. And do you expect to hold up this 210 crores per quarter? Go ahead.
So this run rate is actually, this is more normal. Last year, Q1 was pretty bad because we had, out of our 4 rigs, effectively 1.5 rigs were not working through the quarter. So it's the last year, the corresponding quarter, which was really bad. This is more normal. Having said that, yes, the market is stronger. We think we are past the worst of the offshore market. Hopefully, things should improve from here. Of course, it will be slow because we have contracts. It will only happen as and when we get repricing. And our next rig repricing happens in the middle of next year, in the sense that the next rig coming off contract, where the price is yet to be decided, will be in the middle of next year. Vessel pricing has, in the international market, has gone up a lot. In some cases, it's gone up 100%, or admittedly from not a very high pace, but it's gone up 100% in Southeast Asia, Far East, little less than 100% probably in West Africa as well.
Okay. Two problems.
But asset prices are very, very strong because a lot of rigs are being pulled into new contracts in the Middle East.
Sir, just to complete this point, will you break into the black? Will it be profitable from the coming quarter?
I don't want to give guidance, but I think it's a little early.
Okay.
I think it's a little early still.
We tried.
Okay. All right. Two things that I guess investors would still be a bit concerned about. One is your higher debt, because you have an outstanding debt of almost 4,400 crores as of the quarter gone by. And two is the higher expense, the rising expenses that we've seen.
Yeah.
On both of these fronts, do you expect any respite?
Yeah, so the expenses are not regular expenses. The regular expenses are going as per normal. The higher other expenses in this quarter was because we got a contract from an Indian customer, short-term contract for 5 to 6 months for transportation of crude oil from Middle East to India. We did not use our ships to perform this contract. We in-chartered 2 ships to perform the contract partially. And that's why the expenses, we had to pay the charter hire for those ships. And that's why the expenses have gone up. Otherwise, expenses are very normal. So except for this sort of extraordinary situation where we have in-chartered ships to take advantage of the market. So that's one. On the debt, we are paying down our debt quite significantly. We have a lot of cash. On a net debt basis, on a standalone basis, we have less than 600 crores of net debt in Great Eastern Shipping standalone. In the group, it's a similar, maybe it's 700, 750 crores of net debt.
Okay.
So the debt is very comfortable. And, it's, in fact, we are in a position to do a significant amount of capex because we've brought down our net debt very significantly over the last few quarters.
Mr. Shivakumar, I have 2 questions. One is, so there is a slowdown underway. It depends on who you ask. You'll get answers of whether it's going to be severe, it's going to be a mild one. But globally, we got PMI numbers over the weekend from China this morning. Europe, of course, we know what's happening. In the US also, there are worries. How does this, according to you, will this put pressure on rates as well, shipping rates, meaningfully?
Probably. Yes, probably, because then transportation of commodities gets hit. However, we have one mitigating factor, or 2 mitigating factors. One is that stocks of products and crude have been drawn down very significantly. So especially for distillates, middle distillates like diesel, stocks have come down very significantly over the last few quarters. And they're getting very close to not dangerous levels, but to slightly uncomfortable levels. If demand comes down, we believe that there'll still be demand for ships to transport just to restock in the consuming countries. So that's one mitigant which we have, even in a weak demand scenario. The second is, even if you have a poor market, we would welcome it, because if you have poor tanker markets and ships are getting scrapped, then it just tightens supply going forward. If you have a poor market, hopefully we'll get an opportunity to buy some ships.
Okay.
Which we're looking
and the other one is, and a brief answer to this one, Mr. Shivakumar, is a bit of an unnatural situation which sooner than later has to resolve itself. I'm talking about the one with Russia, right? Because it's pretty clear that the rest of the world is hurting on many counts because of what is being done, which is the Russian fleet being kept out, etc. So will that... Is this is an unnatural situation, unprecedented, but for the shipping market, do you think this will resolve earlier than later? What's your sense?
I think the problem is not the freight. it's not that the freight rates have gone so high as to hurt. It's the price of the commodity really. But yes, at some point, something has to happen to resolve, especially if rates go to very high levels, including the commodity price itself. But something has to be done, yes.
Okay. Very quickly, are you interested in buying SCI?
No, we are not in that process at all.
It was good chatting with you, Mr. Shivakumar. Thanks so much for stopping by. You've given us good amount of details. Wishing you all the best.